Good day. Today we are going to be talking about all aspects of long-term care, not just insurance, but what it is, when it can happen, and how it can happen. We will touch on the costs associated with long-term care services and where your healthcare and government programs fit in. We will take a look at plan designs and benefit options as well. What is long-term care? Long-term care situations occur when you are unable to care for yourself or perform the activities of daily living for an extended period of time. This can be due to an accident, injury, illness, or cognitive impairment. Care can be received in the home for personal care needs like bathing and dressing. Sometimes homemaker services are needed for meal preparation, as well as skilled care for medical conditions or health issues. Facility care is also used when you have more significant health issues and require round-the-clock care. When should you begin planning? Well, sooner rather than later. There is no financial advantage to waiting since rates are based on age, health, and the other items you see here. The younger you are when you purchase a plan, the less it will cost you. However, I think the most overlooked reason to purchase sooner rather than later is health eligibility. You have to qualify for a policy, not just purchase one. Every carrier has a comprehensive underwriting process that includes a personal health interview with a nurse, pharmaceutical history verification, and review of your medical records. So the bottom line, the healthier you are when you apply for coverage, the more likely you are able to get approved. When can it happen? It can happen at any time. A need for long-term care services can result from any of these items you see here. Accidents and injuries can happen in your 40s. Illnesses and other chronic conditions can get diagnosed in your 50s. However, most LTC situations usually occur at the end of our lives beyond age 80. These next couple of slides define a chronically ill individual and the activities of daily living. These are the determining factors in deciding whether your situation falls under health care or long-term care benefits. A physician will certify if you are chronically ill when you are unable to perform the activities of daily living without assistance or supervision for a period of time lasting longer than 90 days. If you are ADL deficient due to an accident, injury, or illness, but expect to recover within 90 days, then your health insurance would cover the bill. Prime example here would be hip replacement. When you fall and break a hip, you will certainly have ADL deficiencies, but you will typically begin rehab right away and recover within 90 days. Here are the activities of daily living, which measure an individual's ability to live independently. These include bathing, continence, dressing, eating, transferring, and toileting. Instrumental activities of daily living are a little different. These also relate to independent living, but they are not considered when determining a chronic illness or long-term care eligibility. These services are sometimes included in home care situations, but will still require the ADL deficiencies as well. How do I qualify to receive my benefits? This kind of piggybacks off those last few slides we just looked at. To be claims eligible, your physician must certify that you are unable to perform at least 2 out of the 6 ADLs for at least 90 days. Or again, cognitive impairment such as Alzheimer's, dementia, or traumatic brain injury can also qualify you for claims eligibility. It really helps to know what the costs are for long-term care services in your area. Here are the national average costs for the 4 types of services. We have home care, adult daycare, assisted living facilities, and skilled nursing homes. We can also look at the projected future costs based on growth in past years. This will help guide you in determining how much coverage to purchase or how far your savings and investments will take you. So now we come to how do I choose my benefits? There are 4 core policy features that you must select to build a policy. First, the daily or monthly benefit. This is how much money the policy will pay towards your care. The carriers have minimum and maximum coverage levels to choose from, typically anywhere from $50 a day up to $400 a day in coverage. Next, we have the benefit duration. This is how many years the policy will pay once you start needing care. Most carriers offer anywhere from 2 years up to 6 years worth of coverage, but for those who are uncomfortable with the idea of running out of benefits, there are lifetime options as well, depending upon the carrier. Now, the benefit duration will also determine the policy value, or what we call pool of money. This is simple math calculation. If you have $100 a day in benefits for 365 days of coverage, that equals $36,500. Think of it as your long-term care bank account. I have $36,500 in my bank, and my ATM withdrawal max per day is $100. If I take my maximum withdrawal every day, I will run out of money in 1 year. However, if I only take $50 a day to pay for my care, then it will take me 2 years to drain down my account value. It's essentially all about the pool of money, not the duration. The next item to choose is the elimination period. This is essentially the deductible. Most insurance plans require an out-of-pocket expense prior to receiving your benefits. This is the same, but in time rather than a specific dollar amount. Again, the carriers have several options to choose from, as you see here, anywhere from 30 days up to 365 days. Last, we have inflation protection. I like to keep this simple and think of it as interest growth. You want to purchase a plan when you're young and in good health, but you most likely will not need to use the coverage for many years, and costs will probably be much higher then. Adding inflation protection will help your benefit keep up with the rising costs of care. There are 2 types of policies. We have traditional and hybrid. Traditional plans are standalone long-term care coverage. You pay ongoing premiums until you file a claim. If a death occurs and no long-term care services were needed, there is no residual benefit from this. These typically have lower annual premiums, discounts for joint policies, and additional benefit options like return of premium or shared plans. Since the premiums are lifetime, they are subject to future rate increases. The hybrids are a combination of life insurance or annuities with long-term care benefits attached. These offer guaranteed benefits for whichever occurs first, deaths or long-term care. Hybrids have flexible premium options that are guaranteed to never increase. You can pay the policy off over 10 years' time, 15 years' time, or you can purchase a plan outright with a lump sum of money. You can also reposition assets by rolling over cash value in existing policies or investment accounts via 1035 exchange. Paying for care. When you're thinking about how you are going to cover the costs of long-term care services, there are 3 ways really: government assistance, self-insuring, transferring the risk. Medicare is essentially health insurance and will only cover up to 90 days post-accident, injury, or illness. Medicaid requires you to spend down all your own assets and has income requirements to meet. VA benefits also have eligibility requirements such as income, disability percentage, and level of service. Self-insuring is basically paying out of pocket, using all your own savings and investments to pay for your care. Transferring the risk by purchasing an LTC policy is going to be the most cost-effective way of protecting yourself. LTCRplus is the group benefit we developed to help members and their families navigate through long-term care situations, which can be emotionally and financially draining. This benefit is available to members and their families whether you purchase a long-term care policy or not. These items you see here are the key benefits included. LTC funding is what we've primarily reviewed today. We are able to shop the market with top carriers to determine which product solution is a good fit for you. Or we can take a look at existing assets and help determine which should be earmarked for LTC expenses if traditional insurance protection is not an option. LTC Navigation is the concierge service we provide, and quite frankly, one of the most valuable services. When it comes to understanding your benefits, our concierge team will help you navigate through the claims process and aid in finding quality care providers. Many families are spread out geographically, which makes checking in on them difficult. This service provides assessments on the quality of care that they are receiving. It's peace of mind, really. Knowing that our loved ones are properly cared for is invaluable. Now, depending upon the level of this assessment, there can be a charge for this benefit. When long-term care situations arise, the need for certain legal documents will be necessary. The legal benefit can help you and your family save time and money by developing these documents through the online resource sponsored by LawAssure. You can print out copies to share with family, but all of your documents will be saved in your profile if you need to edit in the future. Here's a little bit about LTCR and our commitment to long-term care protection. Hopefully this information was helpful. Please work with your LTC advisor who can provide more detail and help design a plan that meets your particular needs. Thank you.